Hello, and welcome to Constellation Investment. This analysis is for Constellation Software on the Toronto Stock Exchange as of 4th of August 2026 with a share price of 3,220 Canadian dollars. The full report is on Constellation.ca. Constellation Software is rated buy across all three horizons. The short-term call flipped from hold to buy because the trigger the last report set has now fired. The shares reclaimed their 200-day average and held it for 5 sessions. It is a half-size starter, not a full position, because Q2 earnings land on the 11th of August, 7 days out, and the entry is already extended after a 16% run in 2 weeks. Buy a half now, accumulate the balance after the print. The quality here is close to best in class. Constellation scores 84. It has compounded capital at high teens to 20% plus returns for over a decade, funded by sticky recurring maintenance revenue and a proprietary pipeline of hundreds of small acquisitions a year. Its rule of 40 lands around 43, and it clears it the honest way, on real cash margin rather than growth at any cost. Free cash flow runs about 3.85 billion Canadian dollars a year and exceeds reported net income, the mark of a genuine cash machine, and it famously never dilutes. The share count has sat flat at roughly 21 million for years. The reported PE of about 65 times is not the real multiple. Constellation's GAAP earnings are heavily suppressed by non-cash amortization of the software it acquires. The honest lenses are cash earnings and free cash flow. On those, the shares trade at roughly 17 times clean forward earnings against a warranted multiple of 27, a ratio of 0.65 that sits firmly in the attractive band on a free cash flow yield near 5.7%. Analysts see the same thing. Consensus is 3,942 Canadian dollars, about 22% above spot, with 12 analysts and 83% bullish. This is what flipped the short call. At the last read, the stock sat below a falling 200-day line and the short buy was capped to hold, pending a reclaim. That reclaim has now happened and held. Constellation cleared its roughly 2,875 200-day average on the 28th of July, held it for 5 straight sessions, and extended to today. Daily and weekly charts both flag a resistance breakout, with relative strength sharply ahead of the market. The catch is that the entry is extended, up nearly 16% in 2 weeks, and running straight into Q2 earnings on the 11th of August. That is why the timing score is 57 and the position is half size. The technical path is open, but the fundamental and catalyst paths stay shut until the print clears. The risks are real and near-term. Q2 earnings land on the 11th of August, and Constellation has a history of 5% plus post-earnings moves. You would be buying an already extended stock straight into that print, which is exactly why this is a half position and not a full one. The bear case sees the shares fall to 2,200 Canadian dollars, about 32% below spot, at a 20% probability, retesting the year's low. The mechanism is a soft print, a higher for longer rate path that raises the acquisition hurdle rate, and private equity competition bidding up the price of the software assets Constellation buys, slowly compressing the returns on new capital. The stop sits at 2,650, below the reclaimed average. Now weigh the risk against the reward. The bull case is roughly 46% above today. The base case, the most likely, about 18%. And the bear case a fall of about 32%. So you are risking about 32 to make 46. So, I'll call on Constellation Software on the Toronto Stock Exchange, buy. Remember, this is for education, not financial advice. Always do your own research. This analysis is by Constellation Investment at Constellation.ca. The link to the full report is in the notes below. Have a great day.